Good morning, everyone. So, I'm kind of hunting a setup here. Um, there was an earlier setup in the morning when 9:30 opened up right here. Traded beneath the short-term low, went into a discount of the day's range, and there was this inverse fair value gap right here. The only problem with this is I I have a rule where I wait for all the inverse fair value gaps to be inversed first before entering trade, and then something like this is just the risk to reward is not very attractive. I'd have to go for something much higher, maybe like the above the current day's high, and I wasn't really comfortable doing that. Or there needs to be a market shift, so there needs to be a short-term high be placed in to shift that structure. So basically, I need some small short-term range to be created where we're going to either inverse all the fair value gaps in that range or break its high and move past it, creating a market shift. And there was also 10 o'clock news, consumer confidence, that was still on its way, even though it was lower impact. Sometimes this has been high impact, so I was kind of aware of that as the case. As a case to introduce random volatility and kind of like waiting for that too. So I kind of watched this trade play out. I didn't really like see it as it formed either. I just kind of was like I did see the potential entry and stuff, but I didn't consider this trade at all. And it just kind of, when I saw it start to work, it just kind of like, obviously I had some regrets. I wish I would have done something. But I also am now reassuring myself that I did the right thing by staying out and not chasing this. Now we have a situation where we've taken out this short-term high, except, right, we're creating a super large range over 160 points. So right now we're about around that time where I'm gonna start to call quits for trading because obviously this is a big range, and it looks like we're going to be expanding. We've retraced into a discount after this is the holiday, so if we kind of like just ever since really Friday, ever since we've ran up all this kind of sideways consolidation here, we've gotten away from this discount, and we're now starting to break through these highs consistently. And so from a discretional point of view, I would be more on the side that we're going to continue going higher and expand. And from a mechanical point of view, from my model, I would be ready to short, but the average range right now is about 160 points, and so now we've just passed that range, and so yeah, I'm no longer looking to trade. I'm still gonna trade. I'm still gonna look at the chart, see if I can find something like a retracement that's outside my model. I'm not gonna take it. So let me actually just log out of my account. I'm still gonna try and find something to take on a paper account or mentally, but just look at the chart. Yeah. And as for the rest of the week, I mean, again, there is more exciting news later in the week, Thursday and Friday especially. So today is the day after a holiday, right? Monday was a bank holiday. You do have durable goods orders, but even durable goods orders isn't that big of a news. It's just because of the forecast. I think it had actual, this is pretty extreme, so it probably does create some volatility, as you can see. But there's still going to be more opportunities throughout the week. And we have the GDP growth rate, FOMC, which is going to create a lot of volatility after that, and then you have PCE. So from here to the rest of the day, if we have FOMC tomorrow, we're probably not going to do anything much else than just expand like this. And if I were to try and find a trade, or in this I had to find a trade, honestly it would just be the first fair value gap. So if we were like here and we retraced down into the 10 o'clock fair value gap, I would have been interested in buying that, and I wouldn't have wanted to see it close in too much. Now we've gotten above this high here, the buy side, we can start to see a little retracement. But I think it's safer to just wait till it retraces and then buy that retracement, just because of the condition price is in right now. I'd say this 5-minute fair value gap is really what I'd want, or refine to this 1-minute gap here, because it's just above the breaker, so there's just lots of confluence there, and we're not really going to need to go back into this range because it's completely balanced here. So that's kind of like why I'm saying we can take this fair value gap, because it shouldn't really need to go back down into that discounted area at all, really. So alright everyone, we're Thursday morning right now, and I'm just kind of gonna go over I guess when I stopped the recording yesterday, I had to leave and I wasn't really able to comment on what else happened with price action. But I'll just tell you where I was at. So basically, I left around 10:30. I went to go and play some basketball, and from that point, price was really just moving to the side, not really doing anything very exciting. I had mentioned how this fair value gap is something that I wouldn't mind taking, to see price, with the idea that it would hold price the rest of the day, preventing it from retracing into a deeper discount. And I mentioned how I really liked this gap. So if price had managed to like retrace, this is something that I would have, even before it got up here like around 10 o'clock, 10:03, I would have loved to buy this. I mean, I wouldn't have because it's not my model, but I mean, the whole reason why is because I kind of see this range here from high to low as the final kind of liquidity run. This is an aggressive run. This is due to swing at 9:30. It really makes quick price action down here and then very quickly runs through it. And when you see that, this almost becomes just balanced. If you go on a higher time frame, it's like an order block. The gaps are balancing out each other. There's no reason to return into this range because all the price action is balanced there. All right, so that's kind of like the ideology behind the reasoning why I would buy this gap here, is because it shouldn't really retrace into it. It should maybe retrace into 20% of that range, but that's it, right? And then at the same time, you have that breaker. You can also look at it that way. So it's like a confluence of a fair value gap and a breaker. But once we got above the buy side liquidity and we started kind of consolidating, that's when I drew this out and I said, well, we already don't really need to go back here at all. We're already far above that. It's unlikely we're going to come back even down to this gap. So we have a nice gap here and we have a down close candle. We closed above. I see no reason to go back down here as long as we stay above this down close candle and inside the fair value gap. And then, it did go up for the rest of the day. Okay, and then hasn't actually really revisited it. I mean, I'm not gonna use that and draw it out through time. Yeah. So that was basically it for Tuesday.